So today, let's pull back the curtain on the world of currency trading. But look, this isn't going to be one of those get-rich-quick talks. Nope. We're going to get real about the risks involved, and we're going to do it by connecting it all to stuff you already get.
Okay, so let me ask you something that might sound a little out there, but trust me on this. The answer is the key to understanding one of the biggest, most powerful financial markets on the entire planet.
And believe it or not, it all kicks off with something most of us have done without even thinking twice about it, grabbing some cash before a trip.
Yep, that's right. If you've ever hopped on a plane to another country, you've already dipped your toes into the foreign exchange market, or Forex for short. It's really just a fancy way of saying you're swapping your money for their money.
I mean, picture this. You're at the airport, you're excited for your trip to Mexico, you find that currency exchange booth, you hand over $100, your US dollars, and they slide back 2,000 Mexican pesos. Boom. Right there. In that moment, you just made a Forex trade. The rate was $1 for 20 pesos. Simple as that.
But here's the thing that's super interesting about that whole exchange. What's your goal? Are you trying to get rich? No way. You're thinking about, well, tacos, right? Souvenirs, maybe a cool tour. You're just trading money so you can spend it and have a good time.
Okay, so now let's switch gears. What happens when we take that exact same idea, that simple vacation exchange, but we completely change the reason why we're doing it?
And this really spells it out, doesn't it? On one side, you've got your vacation fund. The whole point is to buy stuff. But on the other side, you've got professional Forex trading. The purpose completely flips. It's not about spending anymore, it's all about profit. And the scale? Whoa, it just explodes. We're not talking about $100, we're talking hundreds of thousands. And just to give you a real sense of what we mean by scale, check out this number. A single, standard trade, what they call a lot, on a super common pair like the euro versus the US dollar, yeah, that could take about $113,000 just to get in the game.
So you're probably thinking, why on earth would anyone do that? Well, it's because when you're playing with that kind of money, even the tiniest little wiggle in the price, I'm talking a movement of just 1/100th of the price, can land you a $100 profit. It's simple in theory. You buy low, you sell just a tiny bit higher, and you keep the change.
Sounds pretty good, right? Almost easy. But that leads us to the big, scary question that we have to ask. What happens if the price moves the wrong way? What happens if you buy and then it goes down?
And this, right here, is where things get serious. It's where the risk stops being an abstract idea and becomes very, very real. And to get it, we don't need some complicated financial chart. We just need to think about our weekly budget. Yeah, let's bring this right home. I want you to just imagine your weekly grocery budget. You know that number, right? It's real money that buys real stuff. Milk, bread, food for your family.
Okay, got that number in your head? Now, let's say you're in a trade, and that tiny price shift we were just talking about, it doesn't go your way. It goes against you.
So here's the punchline. That small, unfavorable move in the market, it's kind of like watching 10% of your grocery money just vanish. Poof! Gone in an instant. It's not just a red number on a computer screen. It's a real hit. That's money you were going to use for something else.
And that is what a trading loss feels like. The exact same power that lets you make $100 in a split second, it's a double-edged sword. It can make you lose that same $100 just as fast. The risk is literally the mirror image of the reward.
Okay, so if this whole thing is so risky, how do traders even survive? How do they protect that grocery money, so to speak?
Well, the only real way to navigate this tricky landscape is with a map. And that map is education. It's all about learning how to read the price charts, not to see the future, because nobody can do that, but to spot patterns, to see where the probabilities are, where the danger zones might be. It's about understanding what economic news is going to shake things up. And maybe most important of all, it's about practice. Practicing for months with fake money so you learn the ropes without risking a single dime of your real cash.
You know, the bottom line is this. Knowledge is what turns this from a wild gamble into a calculated risk. When you understand the market, you can actually spot opportunities to make money while, and this is key, managing the risk of one of those budget-breaking losses. It's about knowing when to jump in and, maybe more importantly, when to stay out.
So, I'll leave you with this final thought. Yeah, trading can look like a hunt for buried treasure. It's super alluring, but that treasure is buried in a really dangerous jungle. And the real question isn't just, do you want the treasure? The real question is, are you patient enough to study the map before you go running into the jungle to find it?